Our listener viewer base has a lot of aspiring entrepreneurs. Right? What advice would you give them?
The founder market fit part is really important. Why are you the right founder to be solving this problem? What makes you passionate about this space, or what from your background lends you to believe that your way of thinking will be the future is one thing that I would continue to think about. The second is just this idea of why now, like what has changed from a technological perspective that enables you to build this application, or maybe you're building something at the infrastructure middleware layer. Like, why is it relevant? If you think about the next 10 years, why is what you're doing today relevant for the future?
Welcome to the Startup to Exit podcast, where we will bring you world-class entrepreneurs and VCs to share their hard-earned success stories and secrets. This podcast has been brought to you by TIE Seattle. TIE is a global nonprofit that focuses on fostering entrepreneurship. TIE Seattle offers a range of programs, including the Go Vertical Startup Creation Weekend, TIE Entrepreneur Institute, and the TIE Seattle Angel Network. We encourage you to become a TIE member so you can gain access to these great programs. To become a member, please visit www.seattle.tie.org.
Hello, everybody. Welcome to another episode of our podcast from Startup to Exit. My name is Gowri Shankar. I'm here with my co-host Shirish Nadkarni. The podcast is produced by TIE Seattle, a not-for-profit aimed at fostering entrepreneurship. We both are board members of TIE Seattle. Shirish and I live in Seattle and is an author, actually author of 2 books already. And his first book, from which we borrow the name for the podcast, From Startup to Exit, is a go-to guide for every entrepreneur that's thinking of jumping into the startup world. We like to thank all of you for supporting us over the last 2 years. Please share, please subscribe, and hopefully you're enjoying us on YouTube, where the video is also available. Thanks a lot, and look forward to hearing from you more through comments, and enjoy another great episode of our podcast, From Startup to Exit. Now, a word from our sponsor. At JP Morgan Private Bank, wealth is understood to be more than just numbers. It's about creating a legacy, achieving dreams, and securing a family's future. With over $3.1 trillion in client assets under management globally, JP Morgan Private Bank is committed to providing customized financial advice that aligns with each client's unique goals. Clients benefit from a personalized approach, working closely with experts in philanthropy, family office management, fiduciary services, and special advisory services. The firm emphasizes building lasting relationships and ensuring that every financial strategy evolves with the needs of clients and their families. JP Morgan Private Bank not only manages wealth, but also helps clients create a meaningful impact. Whether individuals seek to support charitable causes, manage a family legacy, explore new investment opportunities, the private bank team is there to provide guidance every step of the way. With a presence in key financial markets worldwide, JP Morgan Private Bank offers unparalleled access to global insights and opportunities. Its commitment to excellence and innovation ensures that clients receive the highest level of service and expertise. Time is recognized as precious, and JP Morgan Private Bank values every moment spent with its clients. The mission is to make the financial journey as seamless and rewarding as possible, from the initial consultation to the ongoing management of assets. To learn how JP Morgan Private Bank can help clients achieve their goals, visit privatebank.jpmorgan. Connect with a dedicated team of specialists. Again, privatebank.jpmorgan.com. Thank you.
Welcome, everyone. Please welcome Sabrina Wu from Madrona Ventures, where she's an investor. Sabrina joined Madrona's investment team in 2021 and focuses on sourcing new investment opportunities from seed to Series 3. Sabrina is also particularly interested in intelligent applications, enterprise software, and data AI products. She and Madrona partner Vivek Ramaswamy author a biweekly newsletter called Aspiring for Intelligence, which I'm a subscriber to as well. And I would highly, highly recommend this newsletter. It's a great way to keep in touch with what's happening in the industry, in particular with AI. So welcome, Sabrina.
Thanks so much for having me. Yeah, really great to be here.
Great. So let's start with your background. You were at Vector Capital before joining Madrona, and then joined Madrona Ventures in 2021. So tell us a little bit about your journey.
Yeah, so as you mentioned, prior to joining Madrona in 2021, I spent about 3.5 years at Vector Capital. Vector is a later stage private and growth equity firm. During my time there, I was primarily focused on investing across kind of the B2B technology landscape. And many of the companies that I looked at there were, once kind of VC-backed companies. They were the darling angels of the time. They had maybe found product market fit within one wedge, but really struggled to expand kind of beyond that. So many of those companies got to, call it 50 million or so of ARR. Sometimes they were growing, sometimes they were declining, a mix of profitability and burning capital, and really just needed somebody to come in and help kind of with the next stage of growth. And so those are the types of businesses that I tended to look at prior to joining Madrona. And, we also looked at much later stage companies that had been around for call it 10 plus years. But I found myself, always really excited about two things, which was tech, product, and kind of future vision. And that's when I ultimately decided, I wanted to move earlier stage and do more early stage investing, because you get the opportunity to partner with founders at the earliest stage, help them ideate, help them incubate, and really kind of roll up your sleeves and think about what's the future of technology and how is that going to change the world. And so joined Madrona in 2021, one of the investors here. I spend most of my time investing across B2B software, specifically focused mostly around applied AI ML and up and down the stack, but a lot of my time is spent mostly at the application layers. It's been a really fun journey so far. I joined, just before I guess it was over a year before ChatGPT launched. And then, when the ChatGPT unlock moment happened, it's been really interesting to see kind of the juxtaposition pre that and post that, and how much capital has now gone into AI investing. So yeah, that's a little bit of the journey for me from Vector to Madrona.
Great. So we'll focus our discussion primarily on AI, since you write a lot about it in your newsletter. One of the things that has become apparent is that the competition for LLM foundation models has heated up with new models from DeepSeek and, of course, Meta and Google and others. What is your sense for how these models compare with OpenAI's model? And which models do you see your portfolio companies primarily using?
Yeah. So I'd say one thing, just to maybe level set, I think over the last year, we've really seen a step function change with all the models. You look across all of them, both open source models and closed source models have gotten a lot faster. They've gotten a lot more efficient, and they've gotten a lot better, and they've gotten cheaper. And we see that with DeepSeek. I think that was the big news not too long ago, just about how the model was performing on much cheaper costs. I mean, there's a lot you can dig into, kind of what was the last training run, et cetera. But all of these models have gotten a lot better in the last year. And I think it's really impressive, just the step function change that has occurred. I think within our portfolio companies, we're still seeing them use a lot of the OpenAI models and the Anthropic models. Those are kind of the two that I would say continuously come up. Anthropic Claude models have been probably more performant on the coding tasks and some of the reasoning tasks. So depending on what specifically you're building, what application you're building, a lot of our founders really love using those models. And then with OpenAI, I would say GPT-4o, some of the and other, if you're doing reasoning tasks or other multimodality application use cases, people really love using OpenAI models for that. I would say with DeepSeek, Meta's Llama 3 and Mistral, I would say people are tinkering with those models for sure, but they still take a lot to actually get them to be performant and get them to be usable in certain settings, and it just takes more to get get the model to get to a place that you want it to be as performant relative to out of the box using OpenAI models or Anthropic models. So that's kind of how I see the landscape. But I think that it's constantly evolving and changing, and so I'd be curious to see how this evolves in the next year or so. But I think the models itself have all just become really performant, and you can use them at relatively cheap costs.
Yeah, there have been a lot of predictions that the open source models will catch up with the closed source models like OpenAI and Anthropic and so forth. Do you share that prediction?
I think that there's definitely a chance that happens. Yes, I think that at some point there is a point in which all the models have a baseline level of performance or capabilities, and then to actually get to the last mile, you will have to optimize the models in some form or fashion, be that for the application use case that you're using or trying to solve for. So I think it really depends on what you're benchmarking it to, for example, or what types of tasks you're doing. But I do think that the open source models are getting better and stronger, and they will continue to do so in the next year.
Got it. And I assume the costs have gone down quite a bit, and they'll continue to go down over time. Is that your prediction as well?
Yeah, correct. I believe that will continue to happen, and I think that in a lot of ways, these models will become commodity. And then, the value will be derived for how you build the applications on top, and how you create a delightful experience, and how you fine tune it to do a very specific task, or how you get the model to retrieve certain sort of do it. Like I think we'll talk a little bit more about like agents, right? But I think that the models at a baseline will become a commodity, and then the real value will be what's layered on top at the app layer.
Yeah. So let's talk about agents. One of your predictions for 2025 was that it'll be the year of agents. We've actually spoken to 2 companies already who have built agentic applications. I'd be interested in examples that you might be able to share that you've seen in your portfolio companies where you've been particularly impressed with their capabilities?
Yeah. So I think AI agents, it's really interesting. I think this, there's been a lot of discussion about it in the last year. This year, we're starting to see even more buzz, more activity around it for sure. I think that agents fundamentally can help you with 2 things. One is, as a company, it's one, driving top line revenue. And the second one is helping with cutting costs, right? And so you can think about agents as either a coworker, they work with you or alongside you to help you achieve a certain task, or you can almost think of them as essentially an employee, somebody that you give work to, and they go and in the background are doing that task, completing that task autonomously for you, right? And so that's kind of how I, think about agents. I think that a lot of people have different definitions of them, and there's different types of agents, and there's autonomous, fully autonomous, semi-autonomous. So there's lots that you can dig into there. But I'd say within, what I'm seeing, there's a couple of things. The first is around the vibe coding space. I think that's been talked about a lot of recent, but basically this idea that, these agentic AI tools, you can ask them to spin up an application for you in natural language. So me, as a non-technical person, I can go to a Vercel V0 or a Cursor or Bolt. Bolt is one of Madrona's investments, and ask it to create, call it like a fitness app for me that tracks my meals, tells me how much I should be working out based off of, trying to achieve certain fitness goals and objectives, or maybe I'm trying to run a marathon. How do I create an app that helps me do that in a certain time? And it will go and spin up that application for me. Not only will it create kind of like the UI UX layer, it also sets up the back end. It's a full stack application that you can have coded in any language that you want, and it's all done for you in natural language. And so I think that's one thing that agents are really great at doing in the code gen space. You're seeing that a lot today, and that's probably one of the bigger use cases that we're seeing. In the B2B setting, seeing a lot more vertical and horizontal use cases of AI agents. One company I'd call out in the more go-to-market space is a company called Clarify. It's a next-gen agentic CRM system. It really unifies all your customer data and connects into different data sources, systems like your email inbox, and also different sales tools that you have, and creates a unified view of your customer. And what it does is it abstracts away a lot of the tedious manual tasks that sales teams are usually tasked with doing, be that uploading a new lead or understanding, like getting data entry into the CRM system, trying to figure out who's connected to this person. And then also just doing things like automatically doing follow-ups. They're all done by the agent itself. So the agent understands all the context and it's doing that in the background for you. And so really it's this idea again of abstracting a lot of the low-level tasks and allowing the humans to work on more analytical and important things. And I'd say the agents really act as a, like I mentioned in the beginning, either a co-pilot or basically another employee that you can go and task it to do things for you.
Do you see that there'll be a transition from from semi-autonomous to fully autonomous over time, just because people have to feel comfortable that the agent is going to perform the task properly and so forth?
Yeah, I think we're still in the early innings of that. And I think it'll really depend on the use case. Like it depends on how customer facing it is or how much sensitivity there is around it or how much access you're giving the agent to do, if it's something more simple or if it's something more complex. And I think that there's issues today where we're not fully at a spot where the agents itself can reason. It doesn't have the best memory to understand specifically what it should remember to do or what you've told it previously, like long context memory windows, like those sort of things still block the agent from being fully autonomous without involving the human in a way that it's thinking like the human would or prioritizing like the human would. But I think once we get there, it will be able to go and do tasks fully autonomously for certain types of work. But I think that we're still pretty early in that, and we still need to see some more infrastructure unlock, if you will, for the agents to go and actually execute on a lot of the tasks that they're given.
All right. One of the other things that you've written about is multimodal applications, and that you believe that voice will become the primary interface. Can you give have you seen any examples so far of some interesting multimodal applications?
Yeah, so I think that voice will be one of the interfaces. I think that we are moving to a world where multimodality is critically important, and we're starting to see that with a bunch of applications that are in the market today. I think the ChatGPT unlock was a big moment for people because they were able to interact with these systems. But I don't think that text is the only form of communication for everything. And so I think that we're really at the start of a shifting point of how UI UX will be and the experience of what UI UX should be in an agentic world. So I think that, first and foremost, I believe we should have more personalized experiences. So the idea of going onto a website or logging into an application, it shouldn't be a static experience that you and I have the same landing experience. It should be very dynamic. So based off how we interact with the system, based off of our preferences of interaction, maybe that's voice, maybe that's text, or maybe that's, hey, I want to see an image. The application itself should spit out something different for me. And so I think we're starting to see that. A lot of applications are embedding voice, for example, as one modality where you can talk with the system. You don't just have to chat with it in the natural setting. But I'm seeing that with companies, like companies like Character AI, for example, are a great example of multimodality. You can have an interactive discussion with a chatbot like person, or you can have a real-time conversation with a avatar like persona, and that emotes a different kind of experience that brings it more to life. They can understand how you're reacting, and you can have this kind of conversational video interface with somebody else. And so I think that we're going to start to see more of this in the recruiting space. For example, you're starting to see companies like Mercor that have AI avatars that are emulate kind of human behaviors and can understand, when I'm more emotive or less emotive, what does that mean? How can I get them to be more engaging, less engaging? So I think these sort of, multimodalities will be embedded more in applications. It'll be voice, it'll be more of this kind of AI avatar conversational experience, and it'll also be text and image. So it won't just be one modality, but it should be kind of a mix of all of those, similar to just how you and I interact on an everyday basis. It's not always chat or text. It should be all of the above. So I think that we're starting to move more and more in that direction.
Great. That sounds quite right to me. Yeah. Let me turn it over to Gowri. He has some more questions around vertical, horizontal applications of AI.
Thanks, Shirish. I echo Shirish's thought to all our subscribers and viewers. Please read the newsletter that Sabrina co-authors with Vivek. It's a must-read, great material. So thank you, Sabrina, for keeping us well informed through the newsletter. So let me start with, you touched on one thing, which is as you look at investments today, it's pretty clear that there's the infrastructure layer or the silicon layer, NVIDIA and everybody else. There's the foundation layer, which is now dominated by a few. There's some DeepSeeks and others that may come about. And then there's the intelligent application layer that you really talk about and have extensively talked about. And first going to that, right? In the intelligent application layer, originally everybody thought, hey, you're building a wrapper around ChatGPT or something like that. Turns out you needed workflow or operational expertise to exploit the foundational models, right? And so when you evaluate investments today, how do you separate where incumbents, they're not going away, where, you talked about a CRM application, Salesforce isn't going away, or any other applications, right? They're all not going away. They're also investing continuously in their own capabilities around AI, whether their own models or other models. How do you look at a team and say, hey, they're on to something that could actually build value both as an investment and as a solution to the enterprise that they are selling into?
Yeah, I think that's a good question. I think a lot of it comes down to, do they have first principles thinking? So I think obviously there's a lot of advantages that the incumbents have. They have distribution advantage, they have customers, they have a lot more capital, they've been around, they've built that trust with their customer base, and they have a lot of investment ability to go in and build out new features and products and functionality. But I think what the incumbents sometimes lack is this ability to think kind of on a clean slate, if you will, right? And so I think that the first thing that we look for is, how is the founder thinking about the problem fundamentally? Is there some difference in how they think about it from building this product bottoms up that you couldn't have done before, or would be very hard to rip out legacy systems? As you know, once systems are in place and you've set up an infrastructure in a certain way, it's not as easy to just plug in or swap in different models, right? And so thinking about it architecturally, is there some differentiated approach that they have? Have they thought about the problem, and are they using AI in a way that's differentiated? That's one. I think and then from there, it's just how fast are they moving? Are they using these AI tools to become more efficient? I think that's one of the advantages that many startups have, is that they're actually using a lot of these tools in ways that incumbents aren't or don't know how to, and they're just seeing a lot more advantage from trying new things. So that's kind of what I'd say we look for in when we're evaluating some of these early stage companies.
So just to build on that, right? Madrona's always advocated not only product market fit, but founder fit, right? This is a principle that they have ever since I've known Madrona for a long time. They've really zoned in on, is this the founder to solve this problem at this time? When currently you mentioned Cursor, right? They zoomed into 100 million ARR with a small team, and it's a younger team to have solved the problem they solved, right? So is that changing when a founder comes in because they have this infrastructure advantage that they can navigate, especially in enterprise, a workflow or a solution? Is that being challenged? Is this the founder for the right solution? Because in the SaaS model, you needed that knowledge to really solve that problem. Today, that seems like the LLMs could give some advantage to the founders. Are you seeing that? How are you evaluating a founder in this current setup?
Yeah, so I think founder market fit is still really important here, because I think that you still fundamentally have to be passionate about the problem that you're solving, and there has to be a reason in which you are trying to solve that problem, because again, it's always going to be a long journey as a startup founder. If you just decide to build something that's not something you're passionate about, I think that comes through when times are challenging. I do think there's advantages to building today that founders, call it 5-10 years ago, didn't have, right? Like if you're a non-technical founder, you could put together a mock-up using Cursor or Bolt or one of these different things and have a V1 of a product faster than you ever could before. So I think there's advantages to building in the modern day, but I think this notion of founder market fit is still extremely important. Understanding the problem space that you're going after, understanding why you're the best founder to tackle the problem, understanding kind of what experiences you had that led you to believe that you have a differentiated way of solving the problem. I think Cursory's example is a really great one too, of just how an incumbent how a gen native company can beat out incumbents like GitHub even, right? And GitHub was around for a really long time with their Copilot product out in the market that had a lot of adoption, but Cursor fundamentally understood what the developer was looking for, what the modern developer that coded in new languages wanted to see, and the interface in which the product should be. And they just took a first principles approach thinking around that and made a very, very delightful experience. And that is very hard to do. So yeah, I think this idea of founder market fit is still very relevant, but I do think that there's some things that have changed, from call it 10 years ago, that these founders can tools the founders can now leverage.
So just kind of building on that. So they built something horizontal. Pretty much every developer in every vertical could use. So are you seeing the differences where when founders come to you, that there's a tendency to build a lot more vertical because you could do something that's very clear in its proposition to the solution versus horizontal, which is, hey, I have a multimodal application. I could use it for recruiting or I could use it for, I don't know, debt collection. Both are, two extremely varied, but both are talking to humans and understanding emotions. The horizontal could be applied around either vertical. But I could build a recruiting only vertical AI application and come to you. Are you seeing any shifts today in terms of how founders approach it as models get better and better at things that they are doing between their various gens?
So I think that there's both vertical and horizontal applications being built in the market. What I would say that I'm seeing more of is founders starting with a specific wedge. So even though you could be building a horizontal product, call it within the go-to-market stack or within the software development lifecycle, founders are starting with a wedge where they're winning in that specific narrow wedge and then expanding after they've landed the customer. So it's this idea of more of that land and expand model. Start with something specific, solve a very niche, or not niche, but narrow problem, and then expand from that problem statement as you start to gain trust of your customers. So I am seeing that. There are a lot more vertical application use cases that are appearing. Like, for example, in the legal space, you have companies like Harvey and EvenUp and others that are focused on kind of a vertical application use case. And again, they may start with even within that vertical, they may start with doing one specific thing and then expanding and doing things that expand across the entire job of a lawyer, call it. But I'm seeing both, I would say. But I think that the wedge strategy is definitely one that is resonating with people because it's hard to tackle a bunch of things at once, right? If you win within one wedge and then expand from there, it's much easier than if you just say, I'm trying to do everything under the sun. And there's a lot of different companies that are also competing, trying to do something horizontal as well.
Got it. So let's just flip it the other side, right? So the enterprise buyers that we've talked to, the executive, they're of course bombarded with a lot of Gen AI startups, incumbents that they have from SaaS, from the SaaS era, and then they have the foundational layer players also, whether it's Microsoft or AWS or anybody also coming up, right? There seems to be a distinction emerging between those that can be productive and those can impact outcome, right? As they look at buying things, and it requires a lot of stitching. How do you see enterprises reacting to? Because there's a whole business model, a lot of changes that they have to do. And they really haven't set aside a Gen AI budget. They have set aside a business budget that some of it's getting allocated to that. How do you see enterprises reacting to the various approaches by startups who are born in the AI era, but could make an impact for them, but unclear how they scale or how they go across the enterprise and so on and so forth? What's your read from the market, from the enterprises who are buying products from your startups or anybody's for that matter?
Yeah, so I think ultimately, even you go back a year and a half ago, there was a lot of what I call experimentation budget, willingness from CIOs or enterprises to deploy AI solutions because everybody was trying to find ways to be more productive. I think that is still true today. There are definitely still budgets that are just focused on experimentation or trying to find ways to be more productive. With that being said, I think more so now than a year ago, there is a mandate to make sure that there's actually ROI with the spend that's occurring from Gen AI solutions. And I think that there needs to be a way of showing that there is some value derived from buying these early stage startup software solutions or AI solutions. And that could be measured in a variety of different factors or ways. And I think that that measure is based off of what product you're trying to sell to the enterprise. In some ways, it's more clear what the specific measure of value is. And some it's harder to derive what the value is. Like, for example, in a content creation use case, maybe you're generating a bunch of images or you're generating a bunch of content copy. What's objectively good to one person may be different than what's objectively good to another person. So that's sometimes harder to measure. And so that's a pricing discussion of, okay, well, how do you price a product like that? Is it just and so, is it consumption? Is it usage? Is it some objective form of you decided to use this form of copy? That's a harder thing to measure. But then in other use cases like recruiting, for example, if you have a solution that's like an agentic AI recruiting solution that helps place your next candidate, and the candidate came directly from that AI recruiting service, then okay, the outcome that was derived was the placement of the person, the employee. And so it's a little bit easier to tie some sort of value to. So I think this discussion around business models or just how people are justifying spend at the enterprise level is evolving. And I think that it will continue to evolve. But I am starting to see more different types of business models around outcomes-based pricing or services software start to emerge, and even consumption-based usage, which has been around during the software era as well. But these types of business models, more so now than ever, are becoming more relevant than seat-based pricing, which is the more kind of legacy way that I think SaaS was priced.
So this kind of bleeds into my next question on emergence of business models, right? There's consumption-based, seat-driven, some are outcome. Recruiting could be, some verticals lend itself to outcome. Hey, you help me recruit somebody, I'll pay you on success. Some are, sure, if you're a CRM, it was a seat-based model because of the way it was. What business models are being experimented? Which ones are sticking? And which ones are kind of, not at all going anywhere? They're failing because it's not fits into the budget makeup of the enterprise buyer.
Yeah, so I think the ones that you mentioned are the ones that people are trying today. So, outcome-based pricing. Is there some value that you can tie the outcome to price the product that you're selling? That's one that's common. Consumption is another one that's common that people are trying in the market. A lot of our portfolio companies are testing around that. How much you use, how many queries you have, how does that result in certain types of consumption usage? And that's also a hard thing to measure because you have to figure out what is it that's being consumed and what are the different factors. And I think as you think about AI agents, they're doing a lot of things for you. They could be doing a lot of tasks both in the background, or they can be doing it more, upfront, but they're doing a lot of different types of tasks. And so how do you actually measure that is the question. And like we were talking about, for some verticals, it's easier to measure, and some verticals, it's harder to tie some atomic unit to that. And so I think those are two things that I'm seeing more and more. You still see platform-based models, subscription-based models still, because that's just things that people are used to seeing and used to kind of saying like, oh, I historically allocated $50K to this piece of software, and now I'm willing to allocate $50K to that. So let's just price it as this for now, and then figure out what the usage is over time, and then adapt from that. And I do think with more AI agentic types of solutions, buyers are expecting that the reason they're buying it is because there's all these AI features around it, right? So they don't want to necessarily go and spend a bunch of subscription dollars to not get the AI features, or else they would just rely on their legacy software. And so I think there's some triangulation that's still happening in the market. There's some things that people are trying to figure out. But there's just a lot of testing going on to see what lands. I think pricing is always a little bit of a trial and error type of thing. And then you keep testing and experimenting to see when your customers are happy or when they actually end up walking out of the door. So I think it'll continue to really evolve in the next few years here.
So when you look at the 2025, given the changes that are happening in the market, whether it be at the foundational layer or whether it be adoption levels of the enterprise or anybody for that matter, are there particular areas that you guys are really looking for or look at more than the others, or is it as they come in, we evaluate and see where he goes? Because some verticals seem to be adopting faster, I should say, not more, faster than others, or at least from the outside, it seems like, oh yeah, we are all in on the AI. But it's unclear their adoption is any faster than anybody else's. It's just their perception. So as an investor, are you looking for certain vertical solutions, certain areas more than the others?
So I would say that as investors at Madrona, we are interested in all areas of tech application. And I think that we see AI affecting all verticals in all industries. So I think that there's actually truly opportunity across all different sorts of industries. I would say that we do have a thematic approach to investing. So, different quarters, we may dig into a certain area or have a belief or thesis that a certain area is more ripe for disruption, be that driven by some technological step function change that occurs that allows these models to do things that previously they weren't. Like reasoning is a great example of that. And you're starting to see more vertical use case applications around things like in legal, for example, because these models are really good at understanding large corpus of data. You're starting to see the models get more performant around things around math. And so perhaps there's more opportunities that happen in the finance industry or other industries that are related more to doing actual math, which is a year ago, they were, very comically bad at doing math, and maybe still today they're not the best at that. But we start to think about, okay, well, as these models get better and faster and are better at reasoning and are better at memory, what are the types of things that the applications will therefore be better at in the next 5 to 10 years? So we always like to have a prepared mind and prepared thinking around different areas of interest for us. But I would say in general, we also like to hear about what founders think is really interesting, because for us, it's, the founders are the day-to-day really in the weeds, thinking about this deeply. A lot of them have research background or operating background. So they're thinking about the problem space in a different way. And so we're always open to hearing kind of new and differentiated ideas. So that's kind of how I would describe it.
So last year or last couple of years, at least since you're joining Madrona, if you look at the last, say, 4 years or so, Gen AI has dominated the investment thesis and cycles. It still happens. I mean, I saw well-known, founders are still getting a lot of investments, a lot of dollars chasing a lot of people. But is there a shift from moving from that away because there's enterprises that are clearly saying this is what I am going to spend my money on, so that it becomes very tactical as opposed to is it a problem that's solving for the long haul kind of a thing? Is there a shift moving away from pure Gen AI investments to other things that also involve AI and evolving from there?
Are you saying is that a trend that we're noticing within the enterprises or more so invested dollars?
From investor dollars, rather than the buyers, are the investors such as yourself saying, hey, we've made a ton of bets on Gen AI surrounding applications. Now the next evolution of this is, could they build something on top of Gen AI and therefore slow that down while we shift dollars towards the newer applications that could emerge?
We're still in the Gen AI era of investing, and I think that there is maybe more there are still dollars being invested into more of the enabling infrastructure, not necessarily the model layer, but just enabling layers around how do you use these models more efficiently? How can you get more out of the models? So that could be around different kind of frameworks around things like RAG or things like, MCP protocols. Like, are there more enabling pieces that enable you to build a better application on top? And I think people are definitely thinking about that. But I do think that there's still a lot of investment happening at the Gen AI application layer in particular, because we're just scratching the surface of that. I don't think that we've really moved on past that. I think we're in the middle of people still being excited about investing in this broad space because it's impacting every vertical, every industry, and there's a lot of opportunity to go after.
So our listener viewer base has a lot of aspiring entrepreneurs. Like, what advice you would give them how they should go think about the new AI era, and therefore what would be appealing to you if they bring something as an investor saying these are things to think about? What advice would you give them?
I think, going back to what we were talking about, the founder market fit part is really important. Why are you the right founder to be solving this problem? What makes you passionate about this space, or what from your background lends you to believe that your way of thinking will be the kind of the future is one thing that I would continue to think about. The second is, just this idea of why now? Like, what has changed from a technological perspective that enables you to build this application, or maybe you're building something at the infrastructure middleware layer. Like, why is it relevant if you think about the next 10 years? Why is what you're doing today relevant for the future? So really just having a crisp understanding of the kind of why now as the world is shifting, as the world is changing, be that kind of your thesis for the longer term, or be that a technological shift. I think that is incredibly important. And then just how you're thinking about the overall like UI UX experience of it. As we talked about earlier too, I think that as we go into a new era of agents, perhaps, what does that mean? How do these systems all interact with one another? What does that experience look like? And so I think just those are kind of the high level things that I would think about if I were building a company today. And I think that it still just goes back to the fundamentals if you were building a company 10 years ago, but it's still all very relevant.
Well, one thing that you said in your answer, I think is very relevant. I want to sort of highlight it to a lot of aspiring entrepreneurs. Shirish and I talk to a lot of them who are either thinking or who are going through this, and we tell them the cycle for them to think about is 8 to 10 years, not 1 to 4 years. And that there's some, it's very, fascinating to say, hey, I'm going to do a startup in 4 years, I'll do something. We try to tell them in 4 years, you would have figured out whether your product is relevant or not. That's about it. And the scale is in 8 to 10 years. So it's daunting for them to think, okay, I'm this age right now, I'll be in 10 years, I'll be that age, and a decade has passed. Will I want to be doing that? Whether it's AI startups today, SaaS startups in the past, the timeline hasn't necessarily changed for success. You got to put the time in.
Totally. You always have to be iterating. And the first couple of years can just literally be trying to think about how to iterate, how to listen to customer feedback, how to take that and continue to build a great product. And, we talk about this concept of flywheels all the time at Madrona as well. And it takes time for the flywheels to get going. And a lot of times it's a really long-term journey. And it's not for, it's not 1 to 2 years or even 3 to 4 years. It's 10 plus years in that journey. And so I totally agree.
Yeah, awesome. Shirish, back to you.
All right. Thanks, Gowri. I have a few more questions regarding the investment climate. A lot of money was put into Gen AI companies in 22, 23, even 24. And it's now time for these companies to come back for air and raise more money. But do you see them, a lot of them have achieved product market fit? Do you see them being able to raise more money, or are you going to see a lot of consolidation and acqui-hires?
I think you're going to see a mix of both. If I were to predict, as you alluded to, there was a lot of capital that was put into these early stage companies, some of which we're starting to see succeed. Cursor is a great example of that, publicly known. And then there's a number of them that have struggled to find product market fit and have struggled to really find kind of that narrow wedge that they're landing with and expanding to. So I think that it'll be a mix, as it always has been, and it will continue to be. And I think that's just early stage investing as well. And so, some companies are able to find that wedge and expand from it, and some struggle to do that. So I believe it will be a mix of both.
And then looking ahead for new companies, we are certainly entering some turbulent times with the tariffs and interest rates still being relatively high, talk about recession, etc. How is that affecting your Madrona's appetite for new investments?
Yeah, so I think for Madrona, we are primarily early stage focused firm. So when I mean early stage, I'd say, well, we invest from pre-seed or incubation all the way through Series C. As we were just talking earlier, this is a long-term journey, right? So, think 10 years plus. And so a lot of what's happening in the macro today doesn't affect us, doesn't affect our early stage companies or kind of our appetite for investing in really early stage companies, maybe nearly as much as I would say if you were a later stage growth investor or a company that was closer to IPOing in the public markets that are going to be more impacted by some of the macro that's going on, some of the ability to even go public, just given everything that's happening with macro uncertainty. So at the early stage, I would say relatively insulated towards some of this. And we continue to be really bullish on the opportunity around technology and AI investing. And so we haven't necessarily slowed down our pace of investing by any means. And we're still very, very active. We just raised our 10th fund, announced it earlier this year. So, $770 million of capital and continue to deploy that very actively. So I think, with the macro, there's always going to be ups and downs. As early stage investors, we're here for the long-term journey. So a little bit less impacted than I would say late stage growth investors or IPO public investors.
Okay, one final question is, what is the impact that AI will have on jobs in the next 5 to 10 years? We recently had a conversation with Arvind Bala, who's the CTO at Seekout, and they have just released some agentic software to help with recruiting. Eventually, will replace recruiters in doing their jobs. So, do you see that happening? Really taking steam in the next few years, that it'll actually impact the job creation market?
I think it'll change the job creation market. I definitely think that it is true. There will be AI systems or AI agents that are doing things that traditionally an employee may have done. But I think it'll also enable more creativity of the human to go and actually do things that previously they couldn't do. And so I think it's always going to be somewhat of a trade-off of how these systems are used. And in some ways, maybe it's taking over certain types of jobs, but in other ways, it's enabling you to do jobs that you couldn't do. So it's kind of a mix of both. And perhaps, a non-technical person can now go be a coder and do coding to some degree, and then be able to be, more of a product manager as well, and kind of layer on those hats, whereas before maybe he or she would have been doing something different because they didn't have those capabilities. And so I think that it's not as easy to predict in a kind of black and white setting, but I do think that it's going to be both. It's something that we're watching closely, I would say, and I think a lot of people worry about it for good reason. But I think that there will always be opportunities to kind of think about things newly or creatively that are hard for us to imagine today because we just don't see it.
All right.
Excellent.
Fascinating conversation. Always a pleasure to both read your newsletter and then listen to you talk as well. And we wish you all the best in your endeavors.
Awesome. Thank you so much for having me. This has been a lot of fun. Appreciate it.
Thank you, Sabrina.
Thank you.
All right.
Thank you for listening to our podcast from Startup Exit, brought to you by TIE Seattle. Assisting in production today are Isha Jain and Mini Verma. Please subscribe to our podcast and rate our podcast wherever you listen to them. Hope you enjoyed it.